Bitcoin will go up, as will other assets, but Bitcoin will go up faster. About this trend that we saw in the past. So I think it's real. I think it's really interesting that we finally took this $100,000 barrier.
Plan B's stock-to-flow, or S2F model, is one of the most famous valuation models in Bitcoin's history. It compares the existing stock, the total number of Bitcoin already mined, to the new flow, the rate at which new Bitcoin are being produced through mining. Historically, as the flow decreases every 4 years due to halvings, Bitcoin's stock-to-flow ratio increases, implying growing scarcity. And as that scarcity rises, so does Bitcoin's long-term fair value. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Bitcoin 114 and stock to flow at about 500. Well, 114, of course, as we speak, Bitcoin has gone up a little bit more. It's about 120 now, but yeah, it's at all-time high levels. Same is true, of course, for the moving average and the realized price. But very interesting this month. The realized price, so the gray line, jumped over the moving average, the 200-week moving average, the black line. And if we look in the past when that happened, so when you have a bear market and then the moving average and realized prices get together, and then the realized price pumps. And here too, we see a very deep bear market in 2022. That was the worst bear market ever, in my opinion, below the 200-week moving average and touching the realized price here, below the realized price. So we came from very deep, from a deep bear market. So I'm not surprised that the new all-time high, if you will, the new bull market takes a little longer, because we had really big dip here. And there's a lot of trauma in the market, people that lost money because of this FTX thing. So right now we're recovering, and the realized price has once again jumped above the 200-week moving average. A very important point, I think. So my opinion is that it will diverge further from the moving average, as it did here in this bull market in 2021, in 2017, and in 2013. And every bull market, of course, here in 21, 17, 13, we saw the red dots, the overbought situations, RSIs above 80. We haven't seen any red dots yet. So the big question, of course, now is red or no red. Will we see FOMO and RSI above 80 again? I expect to see some red dots, at least in this cycle, probably even this year in the last quarter or in the first quarter of next year. But time will tell. And what I do know, however, and that's very important too, is you can't have blue, so fear and a crash, without having red, greed and FOMO, in my opinion. So as long as there's no red, we don't have to worry about blue either. So no crash risk at the moment. Then if we look at the moving averages, we have seen the 200-week moving average all the way up to 53. But if we look at the gray line, it's the geometric moving average, and it's at 45. The difference between the two is this is just the average of all the closing price of the last four years, and the geometric mean is the internal rate of return, if you will. So you just look current BTC price and then 4 years back, and then you calculate the constant interest rate or the constant return needed to get from the starting point to the end point. That's the geometric return, and also that's how you calculate the geometric mean. Well, important thing is that they're not the geometric mean is always lower than the arithmetic mean, and that's by definition, and the difference is volatility. So the geometric mean is the 200-week arithmetic mean minus some volatility factor. And so if those lines diverge, as they are now, volatility is getting into the system, momentum is building, and of course that's almost always a bull market followed by a slight bear market. So yeah, I think this further proves that momentum is building, and momentum is a force. So it's like a train; you can't stop it instantly. It will go on for some time. Realized price. Realized price is the on-chain data-driven indicator, and it's the cost price of the average Bitcoin, and it's at the moment at 54, higher than the 200-week moving average. That was 53, right? So we can see that as a bear market bottom. In all the bear markets, 15, 18, and 22, we saw the realized price acting as a floor. So the 2-year realized price, and that's only measured all the coins that are bought last 2 years, not the entire period. So you sort of filter out all the lost coins in the beginning, the Satoshi coins, 1 million. It gives almost the same line, but it's at a slightly higher level. That's the blue line. It's at 92 at the moment. And then you can take an even shorter period, only look at the short-term supply, the 5-month realized price. It's at 111,000. That's the yellow line. Now all realized prices are increasing. It's very funny because normally the realized price is either horizontal, flat, or it really jumps up. Right now we have this 45 degrees angle. It's in for almost a year now that all the realized prices move up, and Bitcoin, of course, being higher than all those realized prices. And that's classic bull market behavior. I see no warning signs. I see no bear warning signs. That would be if the short-term supply, the yellow line.
Bitcoin has already appreciated nearly 300% in 18 months, and yet many investors remain disappointed, wondering why it's not rising faster. Plan B's answer: they're not looking at the right indicators, because the most powerful rallies in Bitcoin's history began under the same quiet conditions: strong fundamentals, weak sentiment, and rising on-chain conviction.
So Bitcoin has appreciated almost 300% in 18 months, and people are disappointed. Now, if you go and you look at why is Bitcoin not going up more rapidly, well, I think there's two things that are driving this. The first is that Bitcoin actually tends to be, in cases where gold runs, lags by 100 days or so. If you remember earlier this year, I took my victory lap online because in May I said, give us till the end of June or early July, Bitcoin's going to run. How did I know? Because gold had peaked in April-ish timeframe, if I remember correctly. So 100 days later, Bitcoin takes off, bang, bang, here we go, higher prices. Gold right now is surging. It's actually up 15% since August 22nd, when Powell did his little speech at Jackson Hole. And so I believe that Bitcoin is going to run. I think it's going to take off in October. It'll run into November, and somewhere November, December, people will be very happy, right? People want to switch back and forth between dollars and Bitcoin. And so having the stable coin actually leads to more demand for Bitcoin. And that's why I think you see Tether as an example, they are Bitcoiners who have a stable coin company, right? They take a lot of the profits of Tether, they put it in Bitcoin on their private balance sheet, right? Not the reserves, but their actual balance sheet. So I think that stablecoins and Bitcoin are together. And then you have companies like Figure, right? Again, I was an investor there in the private market, and Figure, I think, is really unique in that they took a lot of the same ideas around decentralization and how do you digitize assets and create automation on these transactions and rip out cost and time and things like that. Figure, I don't know the latest data, but at one point they were the third largest HELOC originator in the United States. They're probably up there still, top 3 or something. And so I just think that now investors are saying to themselves, wait a second. It used to be I could buy Bitcoin, I could invest in private startups that were either Bitcoin or crypto related, and then I could obviously buy altcoins, right? That was kind of my 3 ways to play this space.
In every cycle, Bitcoin tests not just your portfolio, but your patience. And right now, while the headlines still hesitate, the data tells a different story. Plan B sees the fingerprints of a healthy bull market, rising realized prices, strong on-chain conviction, and zero warning signals. Pompliano sees the macro rhythm, gold leading the way, liquidity cycling through stablecoins, and capital rotating toward Bitcoin as the ultimate hedge. Thank you for watching. If you found this analysis valuable, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next deep dive into Bitcoin and the future of money.